So the topic today is really ethics in accounting. And before I put up the slides, the very nature of the work that we do as accountants put us in the spot. First, we are supposed to be preparing financial statements with objectivity and with independence. We're also required to advise with objectivity and independence. So the question is there going to be a conflict between management and the accountant? And from this day forward, you should remember that going out of university, you're likely to find yourself, maybe not in a very large way, some persons might not experience it, but in a way you're going to find out that your role as the accountant, which is to report fairly and objectively, and management's role, which really is to enhance profitability and secure management bonuses, might actually bring you into conflict. The question is, how do you deal with a situation when your manager asks you to report something in your financials that you know goes against the standards and the general accepted principles of accounting, and you're left? Do I do this and become friends of the managers? Do I state my claim as an accountant and say, listen, my role here is to prepare an independent and objective view? Or you might even consider whether you need to walk away from the job. So as an accountant, ethics and your behavior and how you view the norms of accounts is going to play a very critical role in how successful you are as an accountant. Now, if you measure success based on how much money you earn or based on the quality of the reports that you put out, and those persons who believe in your ability to give them accounting information with a true and fair view, then you might want to consider that as success. So I am going to go through a series of PowerPoint and we're going to have some discussions. So I'm going to put up my PowerPoint presentation now. Are you seeing my presentation? It seems to be going slow here.
Yes, sir, we are.
Yes, sir.
Hold on there. It's not at the appropriate slide. Just give me a second there. Just give me a second there, please. I don't know what's going on. All right, so you can see my team screen, right?
Yes, sir,
So
we're seeing it.
In accounting, and I want to start by discussing that little logo that you see there. Why would I use a man with both arms outstretched and a balancing scale? Anybody? What would that represent in terms of ethics?
An ethical dilemma.
Sorry, I'm not hearing you.
I was saying an ethical dilemma, maybe.
Oh, I don't know. Your mic seems to be going in and out, but I'm not hearing what you're saying. I don't know if it's my issue, but anybody else wants to attempt? I just want to know if it's the volume or audio is from my side. Anybody? What does a man with a balancing scale represent? Let's say a
It's a-
human. Yes?
Sorry, it's striking a balance. He's trying
Striking
to
a
balance
balance.
between, right? So it would be like the management and his beliefs.
Yes. The accountant has to strike a balance, right? About what is being demanded of him, because your workplace has a right to ask you for a certain level of output. But in terms of what you deliver in that output, you have to balance what is required of you with what you know is required of the accountant based on your training on accounting ethics. So I'm going to start off with a definition. Now, sometimes we in the current age, we think that we are the greatest thinkers, you know, and I don't necessarily believe that we are the greatest thinkers today. I think some of the guys who lived before us, without the technology that was there, and with what is just their own thought process, came up with some very, very deep thoughts. So here is a definition of ethics. We do not act rightly because we have virtue or excellence, but we rather have those because we acted rightly. Do we understand what that is saying? That is Aristotle, who lived between 1384 BC and 322 BC. We do not act rightly because we have virtue or excellence, but we rather have those because we have acted rightly. If you have acted rightly as an accountant, it means that you have virtue and excellence, but it's not the other way around. It's what you do that defines you. Not that you come with some virtue that is going to make you do what is considered right. So very important that you remember this quotation. I used to put this at the top of my study test when I was going to university. We do not act rightly because we have virtue or excellence, but we rather have those because we have acted rightly. That is what is going to make you as an accountant feel confident when you're able to do the right thing. Now let's look at the second definition. Ethics, in its broader sense, deals with human conduct in relation to what is morally good and bad, right and wrong. Where is your morally good and right and wrong judgment is going to come from? It's like what we're telling you tonight. This is a part of your training as an accountant. When you get the chance, you should, Google the ICAJ's website and look at what is required of the members of the ICAJ. What are the standards that are required of the members? But in a nutshell tonight, we're helping you to get your moral compass up in terms of how you're going to interface with the world out there as an accountant and as a young graduate from university. One of the things you're also going to remember is that people are looking for people who are fresh, young, out of university. They're looking for you for two things. Perhaps for guidance and leadership, but also sometimes people want to test you. Let me see what this person is made up of. So ethics in its broader sense deals with human conduct in relation to what is morally good and bad, right and wrong. It is the application of values to decision making. So what are the values that you must have as an accountant? Objectivity, independence, and of course, fairness. Do not sign a financial statement that you have not verified. Do not sign a financial statement that you don't understand the numbers. Do not sign a financial statement that does not represent a true and fair view of the organization. So you're going to have to find that your signature is very important. One day I was sitting down at work when I was at Bank of Jamaica, and somebody came in with a document to sign, and I was under a lot of pressure that day. And I said to the person, I can't really sign this because I'm going through some stuff and I need to read through it. And the person said, hey, Nathaniel, we really need to sign this. We need for it to go. And you must learn as an accountant not to be hurried. Always check your figures. Always check your documents. So I said to the person, no, I'm not going to sign this. You can get it in the afternoon. And of course, I went through the document and I wasn't pleased with the document. So I sent it back for correction. No. Once you sign a document, you know, and put your name to it, you know, you can't be coming back and telling people that, oh, you know, I didn't read this. Who wants an accountant who does not read? So you're going to learn that crossing your I's and dotting your T's is very critical for the accountant. Whatever you put your signature on, it must be because you have given your best objective understanding of the document. You have read it, you have tested it, and you have proven that this is correct. Some time ago, I was doing the financials for somebody who asked me to do the financials. And, you know, I said to the person, you know, we're going through, we came up with a profit, and the person said, wow, Nathaniel, with a profit like that, I'm going to pay too much taxes. What can we do about it? I said to him, well, you know, my job here is not to give you the lowest net profit to help you calculate your taxes. We can go back and look at the computation, and within the realm of what is allowable under law, we can see if there was anything that we overstated or which can be adjusted. Suffice it to say, we didn't find much variation. And the person, we had a disagreement, but I said to the person, you know, I'm not going to change anything because these are the figures that I went through, verified, and completed. And the person said, you know, I'll even pay extra. I said, no, I have my reputation to defend. So it's very important that you understand that these values include honesty. But if you're not honest as an accountant, your credibility is gone, right? Fairness. Fairness. You must be fair to the users of the statement, of the financial statement, but you must also be fair to the owners of the business. You're not going to have one person's interest more than the other. You have to strike a balance. So the whole thing is about balance. Then there's responsibility. You know, when I was head of accounts and finance at Bank of Jamaica, our motto was 100%/0. And then everybody came in the organization and said, Nathaniel, what does 100%? It used to just get everybody because it was at the door and it was everywhere where everybody says, what is 100% 0? And I said to them, 100% accountability, 0 excuses. So we agreed then that we are 100% accountable and we don't make excuses. So the motto was 100. Every morning we came in, we said 100% 0. They just said 100% 0. Respect and compassion. You know, respect, if you respect the profession that you are a part of, you're not going to do anything to actually, you know, make it look bad out there. And of course, compassion means that it's really understanding. Understanding that true and fair view is paramount. Now that we have looked at 2 definitions for ethics, ethics in accounting is as important as ethics followed in personal life. So you can't be very ethical in accounting if you're unethical in your personal life. So in order to get to the level of being ethical in accounting, then, you know, you want to look at your own personal life. What am I like when I'm dealing with people? Do I act fairly? Do I act reasonably? About a month ago, my car was involved in an accident. And, you know, the lady smashed out my headlamps and she knocked out one of my rear view mirrors. And a friend of mine said to me, hey, Natty, why don't just let the insurance company fix your whole car? See those scratches on the same side? Let them fix it to mine. And just tell them says that and that and that. And I said to them, no, you know, I'm not going to do that because I have to live with my conscience. So I'm not going to overcharge the insurance company. Now, that is ethics because nobody's knowing if you're doing it. But the question is if you topped up the claim knowingly and submitted it to the insurance company, that's unethical. it's actually cheating. Now, if you don't guard yourself against that, trust me, it's going to cross over into your accounting life as an accountant. Because the minute somebody offers you something in the form of some form of compensation, you probably will just simply agree to mess with the financial statements. A single fraudulent or unethical act in accounting can derail the credibility of an organization and destroy its image beyond repair. I want you to look at that line. A single fraudulent or unethical act in accounting can derail the credibility of an organization and destroy its image beyond repair. And we're going to talk about an accounting firm that found itself in that position a little later on. But I want you to memorize this because it didn't say acts, it said a single. It just takes one. Now, if you remember, one of the reasons why Bank of Jamaica is there as a supervisor of bank is that people have to have confidence in banks. That's why they put their money there and walk away and don't worry about it. But can you imagine if you got up one morning and heard that one of the major banks in Jamaica took money out of a customer's account wrongfully? People would start to have doubts about banks and lose their credibility. So banks are expected to be operating at a very high standard. Accountants are expected to be at a very high standard of delivery, both in terms of the advice that you give somebody and the financials that you present for them. Wherever there are investors and creditors involved, ethical codes in accounting can never be ignored. At the core of accounting ethics is the strict adherence, as much as is possible, to generally accepted accounting principles. Your accounting principles must be your guide and must be your test. So when your managers come to you and say, you know, well, I would like you to report this information a little differently, do it this way, and you're going to say, okay, what does the accounting standard say about this kind of reporting? What is generally accepted? So if I'm going to breach the rules, I know I'm doing something wrong and I know it's unethical. They are the basic rules of accounting laid out by the Financial Accounting Standards Board, and their use ensures the reliability, comparability, and integrity of financial statements. In some rare cases, business circumstances may require diversions from GAAP, but then we have to test that and make sure that whatever we are diverting from, we can explain and it's acceptable. In these situations, accounting ethics require that any departures are fully documented and clearly justified for investors or others reading the resulting financial statement. So you have to document things. So I will tell you another story. I was sitting at my desk one day and we were doing some approvals for a personal loan. And one of my superiors called me and said, Nathaniel, you know, this person has applied for a loan under the normal scenarios, but I'm going to ask you to make an exception for this person. And I said to my superior, well, the only way I'm going to make an exception is I'm going to refer you to policy section 2B that says that if there's going to be a deviation, it must be approved by the governor. So I say, once you get that approval from the governor and the reason for the deviation, I have no problems. But I am not going to make a judgment call on policy. It's just like you should not make a judgment call on the standards. That is why you have interpretation of the standards, so that we can come to a common conclusion as to how to treat certain items. Where you start to doubt yourself whether the accounting that you're presenting is within the scope of the standard, it means that there's a judgment issue there, and that you should seriously think about whether or not what you're doing is the correct thing. Now remember, you can come under a lot of pressure. Management can actually pressure you to the point where you resign. There's nothing wrong if as an accountant you have to walk away from a job because the job is requiring you to do some things that should go against the grain of what you were taught in accounting. For an accountant, it is very important to understand the rules and regulations of his position in an organization. Any deviation from the moral code of conduct or abusing the ethics can result in dire consequences for him, such as a suspension of license, termination of right to practice, and other severe penalties. If you're a chartered accountant and you're a member, well, you would have been a member of the ICAJ, then the ICAJ has its own code of ethics, and it requires that all members behave the same way. So if a client is actually dealing with you and the client feels that you have done him wrong, the client can actually report the matter to the ICAJ. And of course, there's going to be a hearing by the disciplinary committee to see if you actually breached any of the codes that would require you to be considered a chartered accountant in Jamaica. So you want to ensure that when you deal with your clients, your dealings are above board. And when you go to, let's say somebody took you to a hearing and the members on the panel who are going through the hearing said, but no, this man did everything that was right. He refused to do what you asked because he's abiding by the ethics and the principles that would have been required for a chartered accountant. So it should be that your case is dismissed and you walk with your head held high. But if this is a case where you are found to be faulty in your judgment and in your work, which could actually end up with you being blacklisted and being barred from practicing in Jamaica as a chartered accountant, the question is, would that be worth it? Some years ago, I knew a young lady who I taught at Wilmer's High School for Girls, very outstanding student. So one day I was going through the papers and I saw her name in the paper, and she was actually being barred from the legal practice system in Jamaica, and I was stunned, So I called her and I said, what happened here? And said, sir, trust me, it was never my intention. This happened, and that happened. So I said, where was your moral compass at the first point to check yourself so you don't go to wrong 2 and wrong 3 and wrong 4? But she ended up being barred after being one of the top graduates from Norman Manley Law School, having her parents being very proud of her. She found herself being barred. She was so embarrassed that she took a flight, left Jamaica, and never returned. So you don't want to be blacklisted as a chartered accountant in Jamaica. Neither do you want to be seen as one person who was unethical in your work, because it follows you. It follows you when you try to go into a new career. It follows you when you try to go into a new job. So it's good to stay on the good side of judgment, And most of us have good moral compasses, We sometimes don't listen to the compass. So when it's saying no, 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 it's like when you're driving the car and it's giving you that little warning bell, ding, 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 and you ignore it. So your seatbelt is not on, but you just keep driving. You don't want to do that in your professional life. Whenever you start getting that warning, check yourself. If you feel that you're uncertain, call somebody who you know is a senior accountant. Call somebody who has more experience than you, and then say, what is your take on this? I remember some years ago, one of my top students from high school called me and called, I'm having a problem. And I said, what's the problem? She says, my boss who owns the company is transferring a water heater from his house to the business, and he wants me to treat it a certain way. But I don't think that is correct. I think that the correct way of treating this water heater is to add transportation costs from his house on. Is to treat it as though it was a independent transaction. And I said, your approach is correct. So you need to convince your boss that this is the way to go, but do not let him bastardize your accounts to the point that you are now taking instruction as an accountant from a non-accountant. Your role is to advise people what is the correct accounting treatment, and also to be able to say, no, this is not the correct way to go about doing what you're doing. I just want to have a brief look at the ICAJ Code of Ethics, just part A, section 1, integrity and objectivity. So it says, integrity implies not merely honesty, but fair dealing and truthfulness. The principle of objectivity imposes the obligation on all members as professional accountants to be fair, intellectually honest, and free from conflicts of interest. An accountant should not be in a situation where he's conflicted in his role. And if there's a conflict of interest, then you need to declare it, and you might need to actually excuse yourself. I remember one day I sat in a contracts committee meeting at Bank of Jamaica, and the name of a company came up, of which my brother was a director. And I immediately said to them, ladies and gentlemen, I was not aware that this company was also bidding. My brother sits on he's a director of the company. So I'm going to ask that you excuse me from the meeting. And I took no further participation. They said, okay, Nathaniel, you're excused. And I left. If I had gone into the negotiation and then at the last minute, they found out that I knew the director on this board and that my judgment in determining which was the best bid was clouded, the bank would have seen it as a very poor judgment on my part. It would have affected my promotion, the way people view you. So it is very important that you set conflicts of interest very clear. And, you know, it could happen that you are the accountant and that you're at work, they have you on a committee. And on that committee, they're dealing with a client that you know very well. And you perhaps believe that your knowledge and relationship with that client is going to affect your judgment and your ability to objectively and fairly make a pronouncement. You need to declare your hand so that people can say, listen, I have an interest in this thing, so I don't think I should be in this meeting. I should not be called upon to do that. Now, many persons find that ethics, it's almost kind of old-fashioned, you know. In the world today, sometimes people throw ethics outside because they say, boy, you know, today is just eat a food. I just need to eat a food. And then that is the important thing. Not that I'm being fair and honest. So in today's world, fast-moving world, you have to be grounded. And you have to make sure you understand what it is that you're setting up for yourself in life. Or you want to be considered a person who, when you present a set of financials, people believe in it, or you're just going to go along with the benefits that you can get from making a color judgment. And I just wanted to show that here is the ICAJ disciplinary committee. Disciplinary committee has been constituted under Section 21B of the Chartered Accountants Act 1949 to deal with cases wherein the member has been held prima facie guilty of professional and or other misconduct. So once you're a chartered accountant, a certain standard of behavior is expected from you. Very ethical behavior. So when you're unethical and things happen, then you're going to be held accountable, right? Now, I want to have a little discussion with you. It says, when the accounting profession almost died. Now, this is a company. To your left of your screen, you will see Enron. It's the logo for Enron. And over here, you have Arthur Andersen and Company. Now, Arthur Andersen and Company was the accounting firm that did the books for Enron. And we just want to show you a little of how ethical behavior is critical, and how when you're unethical, it can just lead to total disaster. So the story of Enron Corporation depicts a company that reached dramatic heights only to face a dizzying fall. The collapse of Enron affected thousands of employees and took Wall Street to its core, shook Wall Street to its core. It actually brought about some new acts in the United States. As a result of this debacle, the laws were changed. At Enron's peak, its shares were worth $90.75. Just prior to declaring bankruptcy on December 2nd, 2001, they were trading at 26 cents, down from $90.75 to 26 cents. Now, that's a dramatic fall, right? So the question is, what could have caused that? It says, to this day, many wonder how such a powerful business at the time, one of the largest companies in the United States, disintegrated almost overnight. Also difficult to fathom is how its leadership managed to fool regulators for so long with fake holdings and off-the-books accounting. What Enron did was that they borrowed a lot of money and they kept it off the book. So the shareholders couldn't see the debts. But not only that, they were faking profits. So where was the accountant in all of this? Where was the accountant in all of this? Arthur Andersen and Enron. Arthur Andersen LLP was the accounting firm overseeing the books of Enron. As one of the 5 largest accounting firms in the United States at the time, Andersen had a reputation of high standards and quality risk management. However, despite Enron's poor accounting practices, Arthur Andersen offered its stamp of approval, signing off on the corporate reports over the years. So this accounting firm saw all that was happening, knew that it was wrong, but still signed on the financial statements. What does that mean? When you as an audit firm sign a financial statement, as accountants, you are saying that I have examined these financial statements and to the best of my knowledge, objectively and independently, the figures that are presented, I agree. So we know that this accounting firm must have been paid off, and they were. So they were meddling. Remember, your role as the accountant, you know, is like the person who is pure and true. You are giving, people are depending on you. People with their little savings, pension funds. And in fact, so many persons got hurt in this company because there were a lot of pension funds involved in it. People who had retired all the year. When you sign a financial statement, you have to understand the responsibility that comes with that. Because you're allowing persons who don't have the kind of understanding of what is going on in that company and who have had exposure to those documents, they are trusting you. So if you're Arthur Andersen at the time and you are one of the 5 largest accounting firms in the United States, when you sign, people believe you, but you would have been misleading the people. That is unethical behavior. It is not that which you would have expected. Now, why did I say when the accounting profession almost died? When Enron went down, and it also took Arthur Andersen with it, because as one of the 5 largest accounting firms, they were delicensed, they were blacklisted. Now people said, whoa, accountants, I know that. Listen, remember, you know, people never really trust accountants anyway, you know. Say the man who is meddling with the books or doing the work and knows where all the money is a man who is likely to be in a position to commit fraud. Don't forget that. Remember, you know, if you do forensic accounting, one of the things you learn in forensic accounting, you know, is about the fraud triangle. And one of them is opportunity. And opportunity comes through knowledge of the financial statements. So here is this firm, Arthur Andersen, offering its stamp of approval when they know that all that is being produced by the financials on the financial statements for Enron was riddled with fraud, yet they signed it. In fact, almost everybody who worked as an accountant at Enron got their name soiled, even though they were not a part of it. In fact, the senior managers of Enron were prosecuted. But remember, you know, if you were, let's say you were a bright young person out of university with your degree in accounting and you were a chartered accountant, and you had worked at Arthur Andersen, and because of what happened, you go to apply for a job somewhere else, and they say, where did you work? Arthur Andersen. Everybody's going to step out like that. The fraud committed by the company is going to taint you as an individual. In fact, you're probably going to have to say to the people, listen, I did not have anything to do with Enron. I never worked on an audit, but remember, everybody who works on audit with Enron at the time would have been implicated in this scenario. If you did not work with the Enron, the fact that is that you were at Arthur Anderson at the time taints you. So unethical behavior can scar you for life. It's like, when I was at Bank of Jamaica, we do what is called fit and proper. So fit and proper is that whenever somebody applies for a certain management role at the bank, we would have to test them. So let us say that somebody's name came up and one of the banks, for example, wanted to put this person on the board. But then when we did the research, we realized that this person was at one of the banks that failed in the 1990s and was guilty of unethical behavior. We're going to say, no, you can't sit on the board of this bank because your unethical practice from the past comes back to haunt you. So Arthur Anderson was the accounting firm. Oh, I think I had the slide duplicated, right? It should have been here. So I added some more points here. So let me just go over. However, despite Enron's poor accounting practices, Arthur Anderson offered his stamp of approval, signing off on the corporate reports over the years. By 2002, all of the trust and glory came tumbling down. Anderson was convicted of obstruction of justice for shredding documents related to its audit of Enron. So here's a big accounting firm shredding documents that he conducted or would have developed during its audit, resulting in what infamously became known as the Enron scandal. Now, at the heart of the Enron scandal is an accounting firm, one of the 5 largest accounting firms in the United States. The Enron scandal created such distrust by the public in accounting profession. Accountants were very, very disappointed with Enron because it put all accountants under the microscope. It was the most significant case involving unethical behavior of accountants. A firm, it's like if you got up tomorrow and heard that KPMG was involved in unethical behavior, you're gonna say, wow, if an accounting firm like KPMG can be involved, what does that say for the other accountants? So the Enron scandal did a lot to damage the accounting profession, which over time, of course, people realize that not all accountants were like that, because in any kind of profession, you have unethical and ethical. So I end my presentation there.